Yes, in continuation to our income from house property, now we are going to solve the problem on house property income from based on the problem based on the textbook Income Tax by Girish Ahuja. See, in this, the assessees, four house owners, Ram, Bharat, Satrughn and Lakshman, they are having two properties each. Of those 8 properties, that is 4 house owners, 2 properties each they are owning. So for 8 properties, they are having one property each as let out and another one property each as self occupation. So we are given with, for a let out property we have to calculate the value that comes to 2500 is the rent charged for each property, right? Per month the rent is 2500. So what we have to do is, since the municipal value, fair rental value, standard rent are not available, only the rent is given, actual rent received is given, so that itself is considered as the expected rental value. According to that we are taking it, the total 2500 into 4 for 12 months, that comes to 1,20,000. Then another one is actual rent received we have to take. By comparing the expected rental value and actual rent, we can calculate what is a gross annual value. See, for actual rent, one property we are given with the point that one property is vacant for 3 months and remaining 3 properties are let out for the 12 months. So 2500 into 12 for 3 properties, 2500 into 9 for one property, that we are taking. Whichever is higher, 1,20,000 and 1,12,500 actual rent. Whichever is higher, that we have to take as the GAV. But at the same time, since the vacancy is given in the question, that comes to vacancy for 3 months, 2500 is the monthly rent. For 3 months, 7,500. So total amount of a vacancy that comes to 7,500 should be deducted on annual rent or expected rental value, whichever is higher. There we have to adjust the this vacancy. So 120 minus 7,500, that comes to 1,12,500. That is the GAV that we have to take. Then another one is municipal taxes is given for the entire property, that comes to 32,000. It is given in the question 50% of the property, that is 4 houses each are self occupied. Okay, so for the 4 properties are self occupied. So 50% is self occupied, 50% is the let out. So only 50% is let out. So what we have to do is 32,000 by 2. 50% we are taking it for let out property, 16,000. Our net annual value that comes to 96,500. From that we have to deduct standard deduction under section 24, that is 30%. And another one is NAV into 30% we have to calculate. Then another one is interest on borrowing. The total amount of interest on borrowing is given as 1,30,000. Again we have to check 50% is let out, 50% is self occupied. So here this is only the computation of income for the let out property. So we have to take only 50% of interest on borrowing, that is 65,000. So net annual value minus standard deduction and minus interest on borrowing, balance amount is 2,550 is the total income of let out properties. This is owned by 4 assessees. So individual assessee is getting some amount of 637, right? Individual assessee will get individual assessee will get 637. Then another one which is a self-occupied property we have to take. In that self-occupied property, interest on self-occupied property, that comes to 16,250. Then share of HP profit or the loss. 550 divided by 4, 637. So net loss we are getting. Mind it carefully. First we calculated 2550 as the total amount of profit. Then self-occupied property we are calculating. On that we are getting the loss of 16,250 minus what the income we got. Balance is 15,613. That comes to the loss from the house property. Then another one is statement of a total income we have to take. In that statement of a total income, we are given with the business income of 50,000 for Mr. Ram, Mr. Lakshman and Mr. Bharat and Shatrughan. They are getting 50,000, 30,000, 70 and 80 respectively minus HP income, right? HP net loss that comes to 15,613. So business income of 50,000 minus house property loss of 15,613. Balance is the net amount of income that comes to 34,387. Like that, you please identify the amount of total income for Mr. Lakshman, Bharat and Shatrughan. Okay, so when you saw that problem, it looks like a very big question, but technically it has some importance, but very easy to identify the answer, very easy to ascertain the answer. Please solve the problem like this.